5 reasons to own Qualcomm after their earnings. Unfortunately, the stock price is down over 4.7% as I am recording this episode after the company reported earnings, and I guess there might be some things investors are worried about. But taking a closer look at some of the growth opportunities that this company has, I want to say I'm still very bullish in the long term of things. So in today's episode, I want to take a closer look at 5 topics that maybe not many people are familiar with Qualcomm that I believe are great growth opportunities. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free tech channel, and so much more. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Right now, if we take a closer look at Qualcomm sitting at $146, down 4.8%. I am big in the semiconductor industry, as most of you know, and Qualcomm is in my portfolio. The first reason to own Qualcomm is this is no longer the company that many people believe. During their earnings call, the CEO kind of mentioned that they are transforming Qualcomm from a communications company for the mobile industry into a connected processor company for the intelligence edge. And I do believe that is a great move. If we take a closer look at their most recent slide, we can see the different kind of markets they're hitting right now. Handsets, obviously the mobile market is still a pretty big portion of their total revenue, but we can see RF front end is about $1 billion. The automotive market grew 38% at $350 million, and the Internet of Things, which I believe is going to be one of their biggest markets eventually, is $1.8 billion and grew 31% year over year. So not only are they talking the talk, but we can see from their revenue breakdown that they are definitely changing from just a mobile company. I do want to say the more and more I read about Qualcomm and kind of see the kind of growth opportunities that they have, the bigger I want my position to be. So maybe not this week, as I already have 4 stocks I'm watching this week, and check out the video here if you want to learn about them. But next week, I do believe Qualcomm will be on my watch list to overall increase my overall portfolio. The second bullish reason I like to own Qualcomm right now is their automotive market. This was a record revenue for them. Like we saw, it is a smaller portion of this company's total revenue with $350 million this most recent quarter. A few things they mentioned: the automotive design win pipeline is now over $19 billion, up approximately $3 billion since last quarter alone. They also mentioned the Snapdragon digital chassis is becoming the industry's platform of choice and is enabling the transition to next generation vehicles. Like we saw, automotive grew 38% year over year. It was a record revenue for them. And here's a perfect example of a win Qualcomm has recently got in the automotive segment. They recently had a design win with Volkswagen's group software company, K-Rade, to power Volkswagen future automated driving solutions. And we all know Volkswagen is a huge tier 1 automaker, so this is a great move. And if you want to learn more about the automotive market for Qualcomm, on September 22nd, they are going to have their first investor day focused on the automotive market. Right now, for semiconductor companies, the automobile industry seems to be a small position, but I do believe in the next few years this is going to be a big player in forms of revenue for a lot of these semiconductor giants. The third reason to be bullish on Qualcomm is their Internet of Things. Like I mentioned, this is a market that I believe will outgrow their handsets eventually and become a very important. And the great thing is this hits numerous markets. Its most recent revenue was $1.8 billion, and that was up 31% year over year. Here we can see the variety of markets this Internet of Things revenue stream hits. It hits the consumer market from everything like computer, XR, wearables, consumer electronics. Then you get closer to the edge networking, which deals with 5G wireless, with Wi-Fi access points, with vRAN infrastructure, and then it also deals in the industrial market from retail, smart city, energy, and manufacturing. And here they kind of gave their Internet of Things revenue breakdown, and we can see, right, the consumer market is a big portion, but so is edge networking, and the industrial market is also a big player there. One of my favorite things about Qualcomm right now is they are creating CPUs for the consumer market as well in the PC side. And I do believe if that goes really strong, it can definitely accelerate the growth in this revenue segment. Not only are they creating hardware, they also have a form of software stacks that helps with artificial intelligence, and again can overall push this Internet of Things revenue solutions to new levels. Talking about AI, I do believe Meta Platforms is becoming a strong AI company. If you want to watch my video on 4 reasons to buy Facebook or Meta Platforms right now, make sure to check it out above. The fourth reason to be bullish on Qualcomm is their recent extension with their Samsung deal. So they have a 7-year extension of their patent license agreements with Samsung, taking the license through the end of 2030 with the same royalty terms. So for those not familiar, Qualcomm has a QTL revenue, which is pretty much their licensing revenue, and they collect some form of royalty fees. So obviously this partnership with Samsung, or this extension of Samsung deal, will kind of overall keep a steady form of income and revenue coming in from that segment. There is more to this deal because in addition to the Galaxy smartphones, the agreement also includes PCs, tablets, and extended reality and more. We already know how big Samsung is in the consumer market, and while maybe in the short term it might not be a big deal as consumer electronics is seeing a slowdown, the opportunity of having Qualcomm's chips in a lot of these different devices provides a great growth opportunity for the company. The CEO during the earnings call also mentioned that besides the record in auto and Internet of Things revenue, the Samsung agreement is probably his second favorite thing of the quarter. And the reason why is because there is the growth opportunity for numerous chipset businesses, like we mentioned, phones, tablets, computers, XR, and so much more. The final reason to be bullish in Qualcomm is their overall return to capital to shareholders. During the third quarter of fiscal 2022, they returned $1.3 billion to stockholders, including about $840 million on dividends and about $500 million through repurchase of 4 million shares. During the earnings call, they do mention that the focus on returning most of their free cash flow to the shareholders remains a priority. So to me, Qualcomm is actually becoming one of my favorite semiconductor companies with forms of growth and valuation at the moment. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.